Welcome to this explainer on officially dissolving your Kentucky LLC. Now, have you ever assumed that simply locking your doors, turning off the lights, and walking away legally closes your business? Well, you're definitely not alone. A lot of folks think that. But I'm here to tell you right off the bat, it absolutely doesn't. Just walking away does not end your legal liabilities or your tax obligations.
Let's start with a surprising and honestly kind of terrifying fact. If you just walk away from your business, you create what's known as an abandoned ghost LLC. This inactive company can still rack up state fees, late penalties, and worst of all, it can leave you personally liable for unresolved debts if the state ultimately steps in to administratively dissolve it. It's a massive pitfall and one you absolutely want to avoid.
Okay, so here's our roadmap to closure today. We'll start with an introduction to LLC dissolution, move into the pre-dissolution checklist, talk about filing the articles of dissolution, closing state tax accounts, post-dissolution obligations, and finally, some practical tips and our conclusion.
Section 1. Introduction to LLC dissolution.
So dissolution is basically the formal, legal process of closing out the existence of your entity with the state. And there's a right way and a very wrong way to do this. On one hand, we've got voluntary dissolution. This is owner-initiated. It's the proper way to safely end your obligations and protect your personal assets. On the flip side, we have administrative dissolution. This happens when the state forcefully shuts down your LLC, usually because you missed that crucial June 30th annual report. Administrative dissolution is definitely not a clean exit. It leaves owners stuck with fines, fees, and lingering legal exposure. So why do owners voluntarily choose to close up shop? Well, there are a few common scenarios. Sometimes it's a business closure due to financial difficulties or just a lack of profit. Other times, it's a strategic decision because a specific project actually finished up. Or you might have simply triggered a predetermined dissolution clause in your operating agreement. Or maybe the LLC just doesn't have any remaining members. But whatever the reason, the process to dissolve remains incredibly strict.
Moving on to Section 2, the pre-dissolution checklist.
What's really interesting here is that a lot of crucial work actually happens internally before you ever contact the state. You can't just fire off a form on a whim. You've got to get your internal house in order first. So, before anything else, review your LLC's operating agreement. This document usually dictates the rules for closure, like whether you need a simple majority or a supermajority vote to dissolve. Next up, hold a formal member vote. And fun fact, if your agreement doesn't specify the rules, Kentucky default law steps in, which actually requires unanimous written consent from all members. Finally, you have to formally record that decision in your meeting minutes. Clear record keeping here is incredibly important just in case a creditor or tax authority ever questions your process down the road. Once that vote passes, you enter what's called the winding up phase. Think of winding up like moving out of a rental house. You can't just leave all your stuff and vanish, right? You have to collect your assets, sell off or dispose of properties you aren't keeping, and most importantly, discharge and settle all your liabilities and debts. Only after the creditors are fully paid can you actually distribute whatever property or cash remains to the LLC members based on their ownership stakes.
Section 3. Filing the articles of dissolution.
All right, now that your internal house is completely in order and you've started winding up, you've got to file the official paperwork to formally notify the government. You'll need to submit the articles of dissolution, specifically Form LLD for limited liability companies, directly to the Kentucky Secretary of State. You have to note your LLC's exact legal name as it appears on state records, state the reason for your dissolution, and provide the effective date. Accuracy here is absolutely key if you want to avoid having your paperwork rejected. Also, make sure to include the required filing fee, which is a flat $40 for LLCs, for-profit corporations, and general partnerships in Kentucky. If you happen to be mailing a check, it needs to be made payable to the Kentucky State Treasurer. Now, you actually have a couple of options for how to file this. You can mail the form down to the Secretary of State's office in Frankfort, which usually takes about a week to process, or for a much faster turnaround, you can submit it online through the Kentucky Business One-Stop portal. That usually processes in just one business day. Honestly, for most people, the online portal is going to be your best bet to avoid any frustrating delays. Section 4. Closing state tax accounts. Now, getting that certificate of dissolution from the state feels amazing, but it isn't the final step. While Kentucky actually doesn't mandate a formal tax clearance certificate prior to accepting your dissolution paperwork, it is absolutely essential that you formally close your accounts. You need to contact the Kentucky Department of Revenue for sales and withholding taxes, the Department of Unemployment Insurance, and your local county clerk. Oh, and whatever you do, don't forget the IRS. They will not automatically close your employer identification number. You literally have to send them a written request to formally close your business account. Otherwise, they're going to keep expecting tax returns from you.
Section 5, Post-Dissolution Obligations.
Okay, so you're filed and your tax accounts are closed. But legally speaking, your LLC still exists for a limited time just to resolve final claims. To protect your personal assets, Kentucky law provides a pretty handy safe harbor if you follow these specific rules. First, you should send direct written notices to your known creditors, giving them a strict 120-day deadline to submit their claims. For unknown creditors, you should publish a notice of your dissolution in a local newspaper. Those unknown creditors then have a maximum of 2 years to file a claim. If they miss these deadlines, their claims are generally completely barred. Now, I want to highlight a massive red flag here. Seriously, warning. If you distribute company assets or cash to yourself or other members before paying off valid creditor claims, you can actually lose your limited liability protection entirely. The courts can and will hold you personally responsible for those debts, up to the value of the assets you took. So always, always pay the creditors first during the winding up phase.
Section 6, Practical Tips and Conclusion. All right, let's wrap up our roadmap to closure. To make absolutely sure you're in compliance with Kentucky law, follow these steps meticulously. Get your internal vote done and wind up your affairs. File Form LLD and pay that $40 fee. Proactively close all your state and federal tax accounts. And lastly, notify your creditors to start the clock on the statute of limitations. For additional help, you can easily find the necessary forms and portals directly on the Kentucky Secretary of State and Department of Revenue websites. And as always, please remember to consult with a qualified legal professional or CPA. If you have owner disputes, pending legal actions, or complicated tax delinquencies, you really need expert eyes on it. This explainer provides general guidelines, but every single business situation comes with its own unique complexities. So I'll leave you with this final thought to consider. If you just stopped operating, but haven't actually followed this formal statutory process we just outlined, what financial and legal liabilities might your inactive LLC be hiding right now? Don't let a ghost LLC haunt your personal finances. Do it right, get it filed, and close the chapter cleanly. Thanks so much for joining me on this explainer, and I'll see you next time.